Welcome to this first session in the Unit 509 on finance. Financial governance is a key area in any business, and financial management is a key responsibility for us as business managers. In this session, we'll examine those two terms, financial management and financial governance, and then we'll start taking a look at financial forecasting, its importance, the challenges, and the methods we can use. So let's confirm the aims and objectives for the session. So, two aims: understand the importance of financial management within an organisation and understand methods of financial forecasting. So by the end of this session, you should be able to assess the importance of sound financial management practices, explain the governance and compliance requirements relating to financial management, and then explain the importance of accurate financial forecasting, describe the challenges in creating accurate financial forecasts, and evaluate methods of financial forecasting. So, what is the difference between financial management and governance? Well, some will say there is little difference, and that's probably quite fair. But governance is said to be more about a term about overseeing and representing the owners or the people who've got an interest, the group that represents the organisation or the company, whereas financial management refers to putting processes and controls into practice to assist the organisation with planning and ultimately improving its performance. It's about putting those financial governance things into practice and actually managing the finances. It includes things like planning, controlling, monitoring, setting budgets, etc., and carrying out audits. So there are four key areas that will be included in financial management. So, four key areas that really support sound financial management. There's planning, where we're outlining the company's financial direction, expectations for the next 3 to 5 years, adding that control. There's forecasting, using accumulated historical data, trends, to predict the financial outcomes for the next few months and years. And then there's budgeting, using that information to produce an overall plan that will be executed month by month, specifying expenditure and incomes and setting, managing and monitoring. And then finally, there's the overall monitoring with audits and compliance, etc. And that brings together that sound financial management that we're discussing. But why is financial management so important to an organisation, and what does it really involve? I suppose we can start by asking the question, why bother? Organisations can fail if proper consideration isn't given to financial management, because those little inefficiencies, if not addressed as they go along, can be amplified over time, and a small issue can become catastrophic. Additionally, all those processes in financial management, if they're robust, they can actually end up saving the organisation money by better budgeting, recovering bad debts, not getting bad debts. They can save money by avoiding financial penalties, fines, by meeting all their tax burdens, and therefore keeping the business open with a sound financial footing for the future. And that sound financial management ensures that an organisation is able to meet its day-to-day expenses, has enough product on hand to meet customer demand or sufficient resources to produce the product it does, has enough money in the bank to pay staff on time, and has enough capital ready when new opportunities or opportunities to grow present themselves. So they can invest, and that involves managing cash flow, keeping accurate tabs on regular expenses and other expenses, income, and being resourceful enough to have alternative funding available in case of emergencies, for contingency, and having a good enough judgment to determine when to take advantage of these emergency funding situations, so it's planned, not just panic. So what might this all look like? Well, it's going to be different for every organisation depending on their size and their structure, but you might expect to see a financial plan sitting alongside the business strategic plan, which will help identify how they're going to meet financial objectives. Alongside this, there could be some policies around how the budget and finances will be managed, auditing, how financial controls and administration will be handled to ensure that the organisation's finances are all in order. There might be overall responsibility for financial management and other roles and responsibilities around that plan. Then you would expect to see some financial controls. This will be the processes and procedures that need to be implemented to meet that financial plan, that policy. It will play a key role in helping the organisation achieve its financial goals, meet its obligations for corporate governance and for due diligence, but also protect against fraud, embezzlement and other financial irregularities. These controls might be implemented with accountabilities, there might be systems and automation to ensure sort of standardization of data. And then there'll be the setting and managing of financial budgets. The budgeting process is for managing expenses and resources, making sure that, for example, we know the best time to make a particular purchase based on the amount of money that the company is currently earning, or knowing how your expectations will match up to your future earnings, your forecasting, and we'll look at that in a bit more detail. This good budgeting is important because it enables the organisation to approach financial decisions with sound information and sufficient resources and information to control it. And we'll look at that process in more detail in sessions 2 and 3 when we look at budgeting, managing and setting budgets. Whereas when we're talking about financial governance, we're referring to the more overarching sort of way or strategy that the organisation wants to deal with its financial information. That governance is going to include how the company wants to track its financial transactions, how it wants to manage its financial performance, control its data, its compliance, its operations and its disclosures, sort of setting that overall vision or policy about how they're going to go about it. If the organisation practices poor financial governance, the risks are going to be things such as organisational fraud, misappropriation of funds, regulatory penalties such as tax office or other sort of financial institutions, but it can also mean poor decisions are made and taken on the poor financial info, because this is going to set the trend of how they're going to collect and what data they're going to have. And if they're making those poor decisions, then stakeholders and partners and markets, if it's got shareholders, are going to quickly lose confidence in the organisation. And what might that involve? Well, it'll be about setting overall rules for financial controls. It'll be about outlining policies, processes and procedures. What needs to be done? How will it happen? And what's the overall reason for it? The setting of roles and responsibilities, who will do things, who's accountable, setting reporting controls, saying when and what should be reported on and how, outlining budgets arrangements, what budgets there will be, who will set them, agree them, monitor them, control them, and agreeing what audit arrangements there'll be, so internal and external, sort of setting a program for those audits. And that's important because it's going to mean that we ensure the financial data is correct. So we have controls over the financial data, meaning that it's clear and so people know what they've got and where they can use it. Controls can include such things as software to maintain a structure, so that keeping a formatting or validity on a data, a single place or system to store all that data so that all the financial data is kept and tracked in real time with historical information, and then a system that incorporates an audit trail, so inbuilt so that we can track who's logged on, who did what, when, added and changed things. It's also key to producing compliant regulatory reports and disclosures, so financial governance includes the ability to stay on top of compliance requirements. That can be anything from HRMC to Companies House to sector requirements, and this means calculating, collecting and presenting financial data in line with regulatory rules. It means that budget plans and models and forecasting are more accurate because we've got documents that are clear and the executive can use them to set strategies, key decisions and base their visions about where we're going to be on that. It results in faster or quicker completion of financial tasks and processes, because if you've got all that information around, sometimes things are automated, but also it can just save time purely in the fact that it's speeded up because of more confidence that what we've got is correct. Financial administrators are more aware of their role and everyone knows their role within the process, so less deadlines are missed and therefore there's less delays. Some of the stuff is validated automatically because of those systems that are put in place, saving that triple and quadruple checking. And this can result in clear ownership and accountability. So not one report is seen as in isolation, and it's about the governance sets the sort of entire life cycle of where the data, as we said before, about how they're collecting it, how they're monitoring it, what they're using it for. And then finally, it allows the organisation to identify risks faster. If we've got control over this data and we can believe in it, then the pace and frequency of monitoring it and the confidence that you can have in looking at it and seeing any potential causes of concern or potential risks can help the organisation. So we've outlined there what financial management and financial governance is, what it looks like. I just want to quickly look at people's function in this. Many organisations will have a finance department, and they should be working with department managers to prepare the organisational budgets, forecasts, and report back on things throughout the year. And this information is going to be used for everything from planning staffing levels, asset purchases, to expansions, and when cash is needed. And they should also be there to provide information and assist managers in making key decisions such as market projections, pursuing payback periods for large purchases, everything really. So the finance department can contribute an objective perspective on those special financial requirements. In summary, the organisation should know that the financial department should be considered as a resource to assist managers in running the business. It shouldn't be seen as somewhere where numbers are just checked and sent, or as is often seen as where they're checking up on me. A lot of organisations are now outsourcing their finance department if they're smaller, so even a small business can have the benefits of a full financial department. And the sort of areas they're going to be covering are policies and procedures, issue resolution, audit compliance and reporting, and sort of general budgetary things. And we're not going to go through, there's a list on the screen there of all the sorts of areas, but for example, in policies and procedures, it's about establishing the accounting standards and the processes and procedures to meet that policy and the governance. Issue resolution is about working with departments to resolve exceptions and disputes. Auditing and compliance, all those there about preparing for the audits and carrying out the audits. And then in the budgets, approving the budgets based on the sort of published guidance they've got, etc. And similar functions for department operations managers, just slightly different emphasis. As we can see there in processes and procedures, it's about applying and providing, and then in issues and resolutions, it's about communicating and working with the finance department. Audit and compliance, again, providing, and then within budgets, it's general reviewing, monitoring, and we're going to be looking at setting and managing budgets in more detail because that's a large area where the responsibility starts to lie a little bit more with the operations or department manager. And finally, before we move on to an activity, you just want to start thinking about the documents, the records, and the processes that help us track and review how the money in the organisation is going, whether we're making money or not. The purpose of the financial reporting is to really aggregate all the information we've been talking about, all the financial data, so that it can be reported on and deliver information to internal and external people such as lenders, stakeholders, any relevant authorities. If there's any partnerships or contracts with the organisation, a lot of the time they're going to require some sort of financial reporting to support them. Also, certain types of companies are going to have legal requirements to remain within the law, and as we said, lenders, investors have the right to know if their money is being spent wisely and if the company can return a profit. So there are many documents that feed into the financial reporting. We're just going to outline a couple of the main common ones that you may come across in the sort of financial governance and financial management. Firstly, we've got the income statement. So it's presenting the organisation's financial results over a specific period of time. So that could be a month, quarter, or year, depending on which report it is. And it's dependent on the needs and the situation of the organisation. It presents the revenues, expenses, profits and loss generated during that reporting period, and is quite often termed as the most important financial statement because it really sets out the operating results for that entity. We then got a balance sheet that reports that summarises all the organisation's assets, liabilities, equity at that reported date. Thus, the information is presented in one specific point in time, not like the income statement, which is over a period. And it usually considered the second most important document, and it's providing information on the liquidity and the capitalisation of an organisation. So typically it's going to include things such as the assets, so any cash, any marketable securities, Liabilities, any accounts that need to be paid, accrued liabilities, tax payable, short-term or long-term debts, and shareholder equity, so anything about stock, shares, etc. Next is cash flow statement, and that presents the cash in and outflow that occurs during the reporting period. So it might be quarterly, but again, dependent on the situation for the organisation. And it gives a useful comparison with the income statement so that you can match up the amount of profit loss reported to the cash flow experience in the business. And the statement may be presented as a financial statement to outside bodies. And then finally, you've got statement of retained earnings, which is presenting the equity during the reporting period. So the format's going to vary, but you're going to have a starting balance that's going to add and subtract any profits or any dividend payments and end up with a end retained earnings balance. Probably use the least out of the financial statements, and really probably only included in a sort of package of statements. So then, before we move on to the next part of this session, we can do a quick activity. So you need to produce a report, and in that report you need to be assessing and making a judgment on the importance of sound financial management. We've covered a lot of areas, so you may want to do a bit of research within your organisation as well, but you need to bring that all together and assess and make a judgment on the importance of it. And within that, you need to explain how 2 or more governance or compliance requirements are used for financial management. And as I said, there's a note there at the bottom. You may wish to research these, or particularly number 2, based on what's within your own organisation, because it may be useful for you when you come to do your skills unit for this finance area. So use the worksheet on the download, complete it and upload it back up before you go on to the next section.